Good day and welcome to the PSG Wealth Offshore Solution Update. This is for the month of January 2023. We'll start by looking at the market background, and what we actually see is that the month of January was a positive month across global markets, with the MSCI World recording a 7.08% return for the month, and this is in dollar terms. This also filtered true as we see in the western region of the global economy also ending positive, also with the euro area noting a 10.5% return for the month, with also Asian economies also providing a positive return for the month there. Whilst we could also note that emerging market also ended positive, and that is in the back of expectations or optimism around the Chinese region returning to normalization as they're easing on a non-zero COVID policy. And this saw global equities also returning a positive return for the month, with the FTSE global sovereign bonds returning at 3.19%, with investment grade bonds, global investment grade bonds returning at 3.36%. This is at the themes that are taking place globally, with probable global recession concerns that are in the market. However, the market took a positive from the fact that global inflation has decreased from the hikes that were seen in 2022. And this saw locally with the all share returning positive, whilst SA listed property was negative for the month, whilst SA bonds were positive at 2.94%. And then taking a style as well as size view, what we actually note is, from a US perspective, large value stocks on a relative basis managed to outperform for the month, whilst year to date large value still seems to be a relatively outperformer. Whilst if we then look at size and style from a global perspective using the MSCI World, we also see a similar narrative where large value stock are relatively outperforming core as well as growth. And looking at fixed income maturity as well as quality returns, what is notable is high yield long duration outperformed for the month, and that also with short-term government bonds also having a positive return, with corporate short-term bonds leading the pack there at 0.13%. Whilst from a euro perspective, similarly looking at fixed income maturity and quality returns, what is notable is high yield across duration returned positive return, whilst if we then look at government as well as corporate bonds, what we actually then see is that corporate short term relatively outperforming month to date. And with that in mind, how has our solutions fared for the month of January? And what we then note is that using our offshore solution, the PSG Wealth Global Preserver, both USD as well as pound class, we see BlackRock being a top performer for the month, with 91 being underperformer amongst the funds that make up this solution. And within the dollar fund, we see that 4 out of the 5 managed to outperform the benchmark, whilst none in the pound fund managed outperforming. Whilst if we look at the PSG Wealth Global Moderate Fund of Fund, we see 91 taking the lead, whilst Capital lagging there amongst the underlying. Nevertheless, out of the 6 underlying funds that we have, 5 managed outperforming the benchmark. And moving to our PSG Wealth Global Flexible Fund of Fund, we see both in the dollar and the pound fund, Bailey taking a lead, with Veritas in the dollar fund lagging, and Capital Group lagging the underlyings in the pound fund. And out of this solution, we see that 4 out of the 7 underlying funds outperforming the benchmark. And last but not least, the PSG Wealth Global Creator Fund of Fund saw Artisan Global Value taking a lead, whilst Fundsmith underperforming when compared to other underlying funds within the portfolio, and 3 out of the 10 managed outperforming the bench. And for this month, we do not have any fund within the quantitative radar and also the qualitative radar. And how has the funds or the offshore solution fared when compared with their peers? And what becomes notable is that the PSG Wealth Global Preserver Fund of Fund in dollar terms managed outperforming the benchmark over 1 month, the recommended minimum investment period, as well as since inception. Whilst in the pound fund, we see some pressure coming through over the month of Jan. Nevertheless, we still managed outperforming our benchmark over the minimum recommended investment period, as well as since inception. And when we see how we rank amongst our peers, we see that this fund has a strong record for any period that's greater than a month. As you could see, that for long-term investment, consistency within the portfolio in providing above average is featured amongst as a common characteristic within this solution. And moving to the global moderate fund of fund, what we then see over a month holding period as well as since inception, this fund also managed outperforming its benchmark on a relative basis. And what we then see is that from a ranking perspective, the fund managed to provide returns in the top half when compared to its peers. PSG Wealth Global Flexible Fund of Fund. A similar narrative is seen with a consistency within this portfolio, where over 1 month, the recommended holding period, as well as since inception, this fund has managed both the dollar as well as the pound fund manage providing positive excess return when compared to the benchmarks to our investors. Whilst if we then look at the bottom table there, how do we fare when we compare with our peers? You see that for any period greater than 3 years, both these solutions have managed providing returns within the first quartile, whilst the pound fund being ranked first over a period of 7 years, whilst the dollar fund ranked 10th out of 200 funds over a 7-year period, and that would be in the first quartile. And looking at the PSG Wealth Global Creator Fund of Fund, seeing a little bit of underperformance there on a relative basis over 1 month. Nevertheless, we lagged the benchmark by 6 basis points, whilst over the holding period as well as since inception, the fund has comfortably provided positive returns, positive excess returns to our clients. Also, what we then see is for longer investment periods, over 4 years, the fund has been ranked in the first quartile. And just summarizing all our solutions in a single ranking table, just looking at how each has fared amongst the peers. A strong narrative that is seen is consistency, as there will be more greens as well as blues on this table, with further shows that the solutions over long term are providing a consistency of being ranked in the top half of their peers. Then looking at just how the solutions have fared through a 3-pillar approach that we follow at PSG Investment Management. What you then see is these solutions over a percentage of rolling outperformance versus the sector since inception has provided comfortably a minimum across of about 64.47%, with flexible and the creator outperforming the benchmark over the minimum investment rolling period 100% of the time. From a risk perspective, we still continue to provide better than the sector when it comes to risk adjusted returns, whilst from a fee perspective, you could see from the table there that the solutions are still positioned in providing competitive fees when compared to the sector.